Hello there, welcome back to Cost and Management Accounting 86. In this video, we want to look at question 2 on that question paper. So those who are interested in online classes, you can join me on online classes on this number. And we can go to our question and try to see what we have in terms of our question. So on this question 2, we are going to start on 2.1, which reads Green's manufacturers started their business on 1 July 2020. They provided the following information on 31 July 2020. So we're given information that you are given there. Then if we go to the next page, I would see that we have got additional information which reads all the finished goods were sold on 31 July 2020. And then on the required part, it says draw up the following accounts in the general ledger. We've got the production control, manufacturing overhead control, and then we've got the cost of sales. So these are the accounts that we are going to prepare. So we are going to start with the production control. Remember, on this production control, we want to look at the cost of finished goods that we want to transfer to the cost of sales. So we are just going to do a side. So we are going to list all the costs that we gave in terms of material control and the labor control, and then also the manufacturing overheads. Remember, this material control will be represented by the direct material cost that we have in the question. So if you go back there, you would see that we have this information that we have in this table. So we are going to go through that. So on direct material, we have got 80,000 that we have there. And then direct labor, we have got 90,000. Then manufacturing overheads, there, the figure that we have there is we're going to take the figure for applied overheads. It's going to represent the manufacturing overheads that we're going to put on the debit side of the production control. So we take the applied overheads. So you are picking these three figures: direct material, direct labor, and applied overheads. And then the figure that we have, we've got 80,000, 90,000, and 40,000. So we are going to enter those figures on the debit side of the production control. So we go there and just list those as they are on the answer section. So this is our production control. So what we are going to do, we're going to the debit side. That's why we're going to end material control. And then the figure that we have for material control is 80,000. Then we also have our labor control. And then the figure that we have there is 90,000. And then we have manufacturing overheads. Manufacturing overheads, the figure that we have is 40,000. So these are the entries that we have in terms of the debit side of the production control. Then we can now see on the other entries that are going to affect the production control. We can check on the other entries in the questions that we have that are supposed to affect the production control. So we have got finished goods that we have. This one 70,000. So it's going to the double entry for this one. It means we are going to credit the production control, and then we are going to debit the cost of sales. So this is what we have in terms of double entry on finished goods. The figure that we are given, we credit production control, and then we debit the cost of sales. So we're going to go to the credit side of the production control and enter that one 70,000. So go there. So you see that now we come to the credit side, we are now saying finished. Finished goods. This is what we have in terms of our finished goods. And then the figure that we have for finished goods there is 70,000. So these are the entries that are affecting production control. And then we can balance our account. We can balance account by putting our double lines. So you can see that the debit side is greater. Right, if you add 80,000 plus 90,000 plus 40,000, you're supposed to get 210,000. So you have 210,000 here. So this one's a bigger total because here we've got only 70,000. So it's going to come in between double lines, both sides. Then we now say 210,000 minus 70,000 to get the balance supposed to be here on the credit side where we've got a smaller total. And this is going to be our balance CD. And then we go down, obviously we are also supposed to have our balance BD, which is going to come on the opposite side below the double lines. Balance BD, which is 140,000. So this is the figure that we have. So if you go to the next account that we have, we've got the manufacturing overheads control. So for the manufacturing overheads control, we've got the figures that were given there of actual overheads, and then we've got applied overheads. So these are the this is the comparison that we are going to make between actual overheads and applied overheads. So if you come here, you'd see that we have got applied overheads 40,000, actual overheads 50,000, 55,000. So the actual overheads figure 55,000 is going to come on the debit side of the manufacturing overheads control. Then on the out of the 55,000 that we have, we are going to take 40,000 out of it, and then we transfer it in the figure that we put on the debit side of the production control. So we are going to put 40,000 on the credit side of the manufacturing overheads control. So the double entry there of this 40,000 is that we credit manufacturing overheads control, and then we debit production control. And then the balance that we are going to get in the manufacturing account now will transfer to the cost of sales. So you can go there and enter a search. So here on manufacturing overheads, what we are saying is that we have got actual overheads that are going to come on the debit side. And the figure for actual overheads that we have is 55,000. And then we have got applied overheads that is going to be credited here. And then debited the figure that we debited in the production control, which is 40,000. And then the balance we could transfer it to the cost of sales. So remember the figures that we have there, debit side is the greater side, so it's going to come in between the double lines, both sides. Then the difference comes on the smaller total, which is the credit. So it means here that's the balance that we are going to transfer to the cost of sales. So we are not going to have a balance CD in the manufacturing overheads control. So we say 55 minus 40. 55,000 minus 40,000, and we are going to get 15,000. Then we go to the next question, which is the cost of sales. So on the cost of sales, remember, we already have the figure for 15,000 that we are transferring from the manufacturing overheads. This is the figure that we are talking about. This one is 15,000 that we are taking from the manufacturing overheads. Then we also have the figure for 70,000 that we are taking from the production control, credited production control into attempting cost of sales, 70,000. So on those two figures, we can start by entering those ones in the cost of sales account. So we are saying in the cost of sales account, we are saying on the debit side, we've got finished goods that are coming from the production control. So we can just say production control. And it's 70,000. Then we also have the 15,000 from the manufacturing overheads. And then we've got 15,000. Right. And then the balance these are all the entries that we have in the cost of sales. So the balance you are transferring to the trading account. So it means the balance here we are going to transfer it to the trading account. So basically, after putting our double lines, we know that the debit side is the greater side. Credit side, we don't have anything. So you're saying 70 plus 15, you're going to get 85. And then on the credit side, we have 0 because there's nothing. Then the balance will transfer to the trading account. So 85 minus 0 get 85,000. So you get 85,000 here. So this is what we have in terms of the cost of sales. So we can go and check on the next question that we have. It's on the job cost statement. So we are going back to the question to see what we have. Right. On 2.2, it reads Tom manufacturers completed job OT 100 on 30 June 2020 and provided you with the following information concerning this job on this date. And then we are given a list of balances. We are given a list of balances there where we have got balance on 1 June 2020. So if you go down, you see that we also have some balances. And then on additional information, the business sales is goods at cost plus 30%. Then the first part of this question reads, prepare the job cost statement for job OT 100 show clearly the production cost, total cost markup, and then the selling price. So this is what we have. So it means in this case, on 2.2.1, we are going to prepare the job cost statement. So on that job cost statement, we are going to start with the balance from the previous period. That is the balance BD that would have taken from the previous period. Then we are going to add some costs that are there in terms of direct costs, and then also add indirect costs to get the total cost. When we have total cost now, we can now calculate the markup to get the selling price. So this is what we have. If you go to the answer section, you would see that this is the job cost statement of job OT 100. So what we are going to do, we are going to start with the balance brought down, which is the balance from the previous period. So we go to the question to check that balance. So we are here. So you see that on this job, well, let's try to see what we have. We've got balance on 1 June 2020, which is 35,000 rands. So this is the balance that we are looking for. So we can go back and put that 35,000 rands. So we are saying we have 35,000. Then from there, we are going to check some direct costs. So we can check our direct costs there. So you see that we've got direct material 50,000. We have direct material 50,000, and then we can check others. We've got direct labor, which is wage laborers here, 25,000 for our. Let's check for direct labor. We have got 25,000 there for direct labor. So these are the direct costs that we have. So you are just going to put them: direct material and direct labor, 50,000 and 25,000. So we can go there, and we are saying direct material. And then we have 50,000 on direct material. And then we have go to direct labor. On direct labor, we have 25,000. Right. So this is what we have. And then now we can check for manufacturing overheads. After direct costs, let's look for the indirect, which are manufacturing overheads. So we can check in the question in terms of manufacturing overheads that we have. So if you come here, you would see that we have got indirect material 8,000. It's part of the manufacturing overheads. And also we have got this one, the depreciation on factory machinery. So remember, when it's factory machinery, it goes under manufacturing overheads. But when it's office machinery, we don't put it under manufacturing overhead. So we've got 17,000 again. And then we also have, we check for another one, which is a factory supervisor salary, which is 9,000. So here, and here represent manufacturing overhead. So if we add the three, we get the total. So we're coming here and entering them as manufacturing overheads. We can just add them in brackets, whereby we are saying 8,000, and then we add 17,000, and then we add 9,000. So if you add the three, you get 34,000. So here we've got 34,000. So we go down again to check what are we going to enter next. So after manufacturing overheads, we are going to get total production costs. This is the production. So this is now representing the production cost. So what we are saying, if you add the total, we are saying 35,000 plus 50,000 plus 25,000 plus 34,000, we are supposed to get 144,000. And this is the total production cost. So after getting our total production cost, remember we've got selling and administration costs that we need to put. Selling and administration costs, since we want to find the total cost. Selling and administration cost. So we can go there to check what we have in terms of selling and administration cost. We have got an advertisement, it's a selling cost 12,000. Then we've got office machinery, this is administration, which is 5,000. So the two are the ones that we have in the question 4 plus 5, 12,000 plus 5,000. So we can go there and summarize that. We've got 12,000 plus 5,000. So we add the two, The total that you get there is 17,000. And then we can add now to get the total cost now. So if you add, you'd see that we now get the total cost. So if you add 144,000 plus 17,000, you're supposed to get 161,000. So this is now representing the total cost. So remember, we are given there in the question, there is an instruction that is there in terms of the markup that we are supposed to use. Here, the business sells its finished goods at a cost plus 30% markup. So what we are saying 30%. So 30% is a decimal. We are saying 30 over 100. Then as a decimal, it becomes 0.3. So we're just multiplying by 0.3. The total cost that we have times 0.3 to get the markup. So we go there. We are saying the markup. We are saying 0.3, and then we multiply by 161,000. 161,000, and then the answer that we are supposed to get is 48,300. So you get 48,300. So remember, this markup, we are going to add it to the total cost. So if you add, you are supposed to get 209,300. And this figure becomes our selling price now. Because selling price, we are saying cost plus markup, then you get your selling price. So this is representing our selling price. So it means this figure is our selling price. So this is what we have. Then we also have some sections that are left there. We can just try to see how we can calculate our remaining part. We have got 2.2.2. So if you go back to the question, 2.2.2 is calculate the cost per unit for this job. So we can just go there and remember the number of units that we have. Let's check the number of units that we have that were given there. Number of units, we've got 10,000. Number of units are produced, we have 10,000. So we are just going to say total costs, then we divide by 10,000. So remember, the total cost that we got there was 161,000. We can just go there and check. Our total cost is 161,000. So we are dividing it by 10,000. So we are saying 161,000, and then we divide by 10,000 units. And then the answer that you are supposed to get there is 16 Rand 10 cents per unit. And then we also have another question that is there, that is 2.2.3. So we are now on 2.2.3. So we can go back to check what we have in 2.2.3. 2.2.3 reads, calculate the selling price per unit. We have got the selling price that we calculated there. So we are now saying selling price per unit. We have got the total selling price that we have. We can get it there. Remember, we calculated it there. It's here 209,300. So we are going to this is the selling price that we have, 209,300. So let's try to verify that figure. We'll say 161. Let's just say 161,000. And then we add 48,300. You get 209,300, correct? So if you now multiply it by if you divide it now by 209,300, so we are now saying 209,300, then we divide by 10,000. Then we divide by 10,000. So try to see what you get. You are going to get 20. 20.93. So here we are saying 20.93 per unit. So the person, remember the person is asking us, we can go back to recheck the question. Question is saying selling price per unit. So we are saying sales, total sales, and then we divide by number of units, 10,000, then you get your selling price per unit, 20.93 cents per unit. So this is what we have according to this video. So this is what we have according to this video. Those who have subscribed, please subscribe and share. We are still coming with more videos. As for this video, I'm signing out.